Hi, everybody. I'm Keith Phillips. I'm the CEO of Piedmont Lithium, so another lithium story, but a spodumene-based story. We're an American company, and we're very focused on helping to secure America's energy national security. Let me look down here so I can actually see my slides. So I've got, this is on our corporate website under presentations. It's like a 12-page executive summary I'm going to go through. Then we have project details at the back you can see on the website, or I can turn to with Q&A. But I really just want to do the high-level executive summary. Why Piedmont? So first of all, lithium markets are exceedingly strong. We have a large spodumene resource base that we control. We intend to integrate forward to produce lithium hydroxide. We're diversified by asset and geography. We're developing 4 projects. We have near-term cash flow potential in Quebec. We should be into cash flow sometime in the middle of next year. And we have a very supportive U.S. government, which I'll talk about in a minute. On the right-hand side, just some metrics I won't go through in detail other than we are an American company. Our primary listing is on NASDAQ. We're also listed on the ASX. Market cap around $1 billion. Stocks are very liquid. And we have a strong cash position around $118 million U.S., and we own $200 million worth of stock in 2 of our partners we'll talk about. So we have a lot of cash and securities. We have 10 analysts who cover us in research from around the world. They all have buys on the stock. Happy to send some of that material your way if you're interested. I'll talk just a minute about the lithium market. You've probably heard this before, but a couple slides I think are interesting. On the left-hand side here, this is a slide. This is from a research analyst named Matt Fernley in London, very knowledgeable guy, publishes the Battery Material Review every month, and his chart is interesting. It shows what he thinks electric vehicle sales would be, that's the gray part of the bars on the left, if there were no material constraints, if there was enough lithium, if there was enough nickel, et cetera. And then in blue, he shows what he thinks EV sales, so that's demand. And then in blue, he's showing what he thinks sales will actually be, given in his view, it's inconceivable that there'll be enough lithium and other metals this decade. So his view is similar to mine, which is the next 10 to 15 years, I think we're going to have critical shortages. In the 2040s and beyond, I think this will be a pretty normal market with, GDP plus a little bit of growth. There'll be a lot of mines developed, there'll be recycling, but for the next 10 or 15 years, I think it's going to be glorious times for anybody who can get into production. On the right-hand side of the page, I'm always asked why lithium is, the car companies say, why does it take so long, and why isn't there going to be enough lithium? If you look on this page, you can see Elon Musk can build a car plant in a year. Ordinarily, it might take 2. Battery plants and cathode plants can be built pretty quickly. But as many of you probably know, it takes a long time to develop a mining project. Our Carolina Lithium project will be, we hope, in production in 2026. That'll make it a 10-year timeline. That's pretty darn good. As you see here, it's usually 6 or 7 to 20 years, depending on where you are in the world. So the big thing holding back and driving supply demand, we think there'll be a lot of demand and there won't be enough supply. Lithium prices are at all-time highs. You've probably seen this. Just on the left-hand side is lithium hydroxide. On the right is spodumene concentrate prices. And if you haven't looked closely, there are diamonds here. 1, 2, 3. There should be 9 of them. There have been 9 or 10 auctions. Pilbara Minerals, a large spodumene producer, has been auctioning 5,000 or 10,000 ton lots of spodumene concentrate. Brilliant strategy. It's really driven the spot market. They are, I think, the mark on the spot market now. And those are the prices you've seen them achieve. Spodumene prices are up 20x in about 2 years. And I had an interesting conversation, by the way, set away from this conference, with one of the 3 largest institutions in the world, the biggest shareholder of Albemarle, the biggest shareholder of Livent. We're having a conversation about prices. Let me go back to this. I don't have to go back to it. And I said to him, let's just assume lithium prices fell by 50% over the next 5 years. And he said, he just paused. He said, Keith, what do you mean? Why do you think lithium prices would fall? So his view is, he's one of the 3 biggest investors in the world. He's the biggest shareholder of Albemarle and Livent. He doesn't have any idea why lithium prices might fall. I kind of share his view, but interesting. This page is, I think, interesting just to show, on the left-hand side, you see a chart of spodumene prices just over the year to date versus lithium equities in blue. So lithium prices way up, lithium equities up modestly, and very highly varied. Some big successes, a lot of stocks are down, versus the 2 lines in the bottom, which are other metals equities and other metals commodity prices. So you would expect equities to follow commodity prices or maybe even lead commodity prices. But in lithium, the market clearly isn't believing what we're seeing in the market, and I think the lithium equities broadly are very undervalued. And on the right-hand side, just a chart showing how much more lithium we'll need to meet certain environmental targets relative to other metals. There's no metal with the leverage of lithium. The problem is particularly acute in the U.S. So on the left-hand side of this page is a map of most of the big battery gigafactories that have been committed to in the U.S., from the big car companies to the big battery companies. And this map looked a lot different 18 months ago. The momentum really started last June, July, August, but there have been big announcements from Ford, GM, and Stellantis, and Tesla, and other car companies, SK, LG, Samsung, Panasonic, battery companies. And what that translates to on the right-hand side of this page, and this is sort of an important part of our story, we're very focused on lithium hydroxide, which we're going to make from spodumene concentrate. The bars on the right are what we believe the lithium hydroxide demand will be for each of these plants. There are a couple plants we think will be carbonate focused. They're not on the map. This is just how much lithium hydroxide we think we'll need in the U.S. Over 650,000 tons, they're all saying 2025. Now, it won't happen, but so let's say by 2030, and the number will grow. The whole world hydroxide production this year is probably 250,000 tons, give or take. So even if all the world's production kind of came in to feed this market, there's not nearly enough. And domestically in the U.S. right now, we produce 15,000 tons a year. On the lower right are the people planning to produce lithium hydroxide in the U.S. We're planning to produce 60,000 tons, 2 30,000-ton plants, one in Tennessee, one in North Carolina. Standard Lithium and Ioneer are talking about doing lithium hydroxide as a phase 2 after carbonate. Livent and Albemarle are the incumbent producers. Albemarle tends to be very large. Anyway, there's not nearly enough domestic lithium hydroxide production even being talked about. Even if you include the potential in Quebec, which is significant, and we're part of that, there's not nearly enough in North America. So anyone who can get to production in the U.S., we think will be in a really strong position. Just quickly, U.S. government policy. From the Trump administration to the Biden administration, there's been really strong support of electrification from different perspectives. The Trump administration was all about national security. We want to control our own raw materials. We don't want to get it all from China. The Biden administration has doubled down on that, but they're also very focused on driving electrification generally. So among the things they've been doing is granting money to people who are developing American projects. We got a grant 3 weeks ago for $142 million for our Tennessee lithium plant. CapEx is $600 million. That's a very significant amount of money for us, so we're very excited about that. They also have low interest loans available through their Department of Energy programs. And then importantly, when the Inflation Reduction Act passed a few months back, it has some very important tax credit provisions that only apply to American plants. So the EV tax credit applies so long as you get the critical minerals from somewhere that we have a free trade agreement with, Australia, Canada, Argentina, et cetera. But for the advanced manufacturing tax credit, which for us would be 10% of our production costs, we only get that if we're an American taxpayer. Our production costs could be depending on spodumene input prices, could be in the billions. So it could be hundreds of millions of tax credits every year forever. That only applies to American plants. Sorry. Okay, here we go. Last thing is just what our strategy is. We want to be a leading producer of lithium hydroxide in the U.S., all produced from spodumene concentrate that we own. Hydroxide, because you need hydroxide in high nickel cathode you need for long-range vehicles that Americans and Canadians want to buy. We all drive big vehicles a long distance. We want to produce some spodumene concentrate just because we think it's easier, and we have a big spodumene endowment, so there's some really exciting DLE projects, clay projects, conventional brine projects. We don't know much about those. We're not pursuing those. For us, it's all about concentrate. And we've had a couple of big car companies talk about how, from their perspective, they're confident it'll be far easier to scale concentrate production. That's my view. And we want to own the material. If you look on the right hand, there's a chart from Chris Ellison, the CEO of Mineral Resources, his annual meeting comments, where it's a cost curve, and the blue bars are basically the Chinese converters, who are world-leading lithium hydroxide producers. They have to buy raw material, import it into China, and convert it. So they're paying market for the raw material. They're collecting a relatively modest margin, still pretty good. On the left-hand side in black are those are integrated spodumene producers like us. They're people that own the material. Right now, most of the margin is in the mining. We want to capture all that, so that's why we want to own the resources, and we do. So to that note, we have 4 projects, and I'll go through these pretty quickly. In Quebec, we're a 25% partner with Sayona Mining in what we call Sayona, Quebec, which is near the Val-d'Or region, North American Lithium, OTA, and Tanzam. In Ghana, we're earning a 50% interest in the Awoya project in the Cape Coast with Atlantic Lithium. In Tennessee, we're developing the biggest hydroxide plant ever built in the U.S., 30,000 tons. In Carolina, we're building a 30,000-ton hydroxide plant backward integrated into mining. All the lithium in the world came from North Carolina from the 1950s to the 80s. That's where the industry really was invented. So we're going kind of back to the future back in North Carolina. The development timeline for these projects will be, don't skip ahead, okay, good. We hope to be in production in Quebec in the first half next year. That's a restart of North American Lithium. It's produced off and on, since it was built 10 years ago. In Ghana, we hope to be in construction by the second half of next year, in production toward the end of 2024, spodumene concentrate. Tennessee, we hope to be in construction again second half of next year. That'll take 2 years to build a chemical plant and then ramp up. And Carolina Lithium, we hope to be in construction in the middle of 2024 and in producing by the second half of 2026. So that's the cadence of the projects. And I want to talk for a moment about valuation thoughts because, like every CEO, I'm very frustrated with our valuation. So $1.1 billion is a nice number, but it's not as nice as some other numbers. This is just a page. I won't go through the detail other than to show how we calculate enterprise value on the left, including our equity interests, what our project interests actually are. We've made the story a little more complicated than some: 4 assets, joint ventures, equity positions. Then on the right-hand side, importantly, this is the EBITDA impact to Piedmont Lithium of the NAL project starting up in Quebec next year at different spodumene prices. It's indicative, but at spot prices of $7,900 a ton, we would in theory earn $791 million a year on our offtake agreement. So our offtake agreement is we get to buy the greater of 113,000 tons of concentrate, or 50%, so it'll be 113,000 tons at market price is subject to a floor of 500, a ceiling of 900, spot at 7,900. So that $7,000 increment is to our credit, not to the joint ventures, times 113,000 tons of 791 million. At lower prices, it's still very, very significant. That's cash flow we believe will begin next year. It's very, very significant. I don't think the market doesn't fully understand it. And then the last thing I'll say on value is, we think we offer scale, diversification, and downstream integration with near-term production. So on the left-hand side, our enterprise values of people we think are comparable to us. You have 3 Australians, Sayona, Core Lithium, and Liontown. And then you have Lithium Americas, Sigma Lithium listed here, and the U.S., and Livent. And in the middle, you see what each of our companies' potential spodumene production is on an annual basis. So we have a very large endowment of spodumene, around 500,000 tons a year. And then on the right-hand side, you see how much we intend to produce from a chemicals perspective. Our number is very significant. So it's a sizable business, relatively small enterprise value we think offers good value.